Hello and welcome to Business Today Television. I'm Siddharth Zarabi and joining me today is JC Artigas, the Global Head of Research at the World Gold Council. Thank you very much for joining us, JC. The conversation is being held at the backdrop of what is happening to gold prices. And there are all manner of details and information that are coming out as to what is happening as far as gold is concerned. Give us an overview of where the gold market stands as of now.
Thank you so much for having me, by the way. And it's a very interesting time to be looking at the gold market for sure. The gold price actually has been rising significantly so far this year. And it has been on the back of a combination of various factors. But I would say primarily things that stand out are, number one, central bank demand that continues to be strong. And number two, investment, in particular from Asia in general. So you can see some of that in India, but especially as well in places like China, where gold has been quite favored. You can combine that with some resilience as well on the jewelry market, in spite of some of the higher prices. Of course, the high price or the increase in the price of gold can have an effect on jewelry. But all things considered, partly because especially in emerging markets, we have continued to see economic growth that has somewhat mitigated the effect. So overall, you can see a very interesting market today where there's still quite a bit of interest.
Since there is still quite a bit of interest, what is the outlook as far as prices are concerned? They've hit record highs. Is there more steam left in the gold price rally?
Well, I mean, while we don't forecast directly the price of gold, what I can tell you is that with our analysis does suggest a few things to bear in mind. Number one, central bank demand continues to be strong. Over the past couple of years, central banks have contributed not only to the overall health of the gold market and demand, but also to price performance. Now, so far this year, we have seen quite a strong Q1, all things considered. And even though central banks are not necessarily just seasonal buyers, so it's not that they just buy in Q1 or Q2 or Q3, so far the trends has been quite indicative of continued demand. And anything that is above the long-term 10-year average can be supportive. The other aspect that is interesting as well is that Western investors have been largely out of the market, especially if you look at the bar and coin or the gold-backed ETF market, which basically means that the market is not completely saturated, right? There's still steam or room to grow. Especially as eventually interest rates start to come down in Western markets. Again, not anytime soon, but as they come down, that lowers the opportunity cost for gold. Naturally, with the gold price, you can still see movements up and down, and that is a part of a healthy market and price discovery. But the retreat since the highs has been relatively small, and so far we continue to see pockets of strength around the world.
What about central banks? They are buying gold. How long do you think this will continue? Is it directly linked to geopolitical uncertainties? And if geopolitical uncertainties recede, will central bank buying also go down?
Well, the first thing to note is that central banks have been net buyers of gold for more than 13 years now, right? So you continue to, is demand that has been in place for quite some time. And even though it has accelerated over the past couple of years, is not completely new. It's something that has been happening for quite some time. Now, what are the drivers behind this? It's a key question. One of them is for sure diversification of reserves, geopolitical risks, and just ensuring that central banks, especially emerging market central banks, have healthy foreign reserves is important and is one of the drivers. And we don't necessarily think that this is going to change anytime soon. The reality is that the geopolitical landscape today is more complicated than it was even 10 years ago when they started to buy. And again, obviously everybody hopes that things normalize, but the reality is that the role that gold plays as part of foreign reserves is not just to mitigate geopolitical risks, is to properly diversify reserves against currency risk and credit risk and concentration of specific assets.
Absolutely, and diversification of forex reserves away from the US dollar, that's an important point that we need to consider. What about demand, especially in Asia and from India specifically? Our viewers here would want to hear from you as to how the Indian demand is perceived in the global gold circles.
Well, India is a really important market for gold for sure. I mean, it continues to be a spotlight for investors and consumers around the world. It contributes significantly to overall demand and the health of the market. Now, in particular, we continue to see interest from investors in India, and it's a point worth noting. Now, consumer demand, or in particular jewelry demand, has been, especially in more recent times, in recent weeks, being slower slightly, partly because of the increase in the price of gold. And that is natural for the market. I mean, it creates a very common dynamic for an asset and a product such as gold that is so important for the business. But overall, I mean, Indian demand continues to be important for gold, not only perhaps in the short term, but especially in the long term.
In the short term, what's your own reading of the Indian wedding season? So, Indian weddings are known globally for the manner in which they are done. Do you see that impacting prices upwards in the immediate short term?
Well, I mean, I think that this is an area where we keep a close look on. I mean, because clearly gold for wedding jewelry is an important component of this overall trend, right? And I think that understanding how that is moving and how it's behaving is going to be key for the health of the market. Overall, I mean, we continue to see a market that embraces gold. Both from a cultural and a practical perspective, because it helps families preserve wealth over the long run. And, that is, of course, key in this market.
JC, explain to our viewers here in India what China is doing as far as its appetite for gold is concerned. When we look at China, we look at a economy that perhaps is struggling with certain aspects. Real estate, for example, is an area that perhaps isn't doing that well in China. Is Chinese demand for gold linked to that, or are there other factors at play?
I think that there are many factors. Partly is just because of the role that gold plays in helping diversify investments. That's number one, but also the way that it behaves and the performance it has. In recent years and when over the past few months in particular, I think that investors are also following cues from the central bank in China, so from the PBOC. Because the PBOC has been buying gold for quite some time continuously, right? And that in itself, is generating attention from all the investors that understand that diversifying foreign reserves for the central bank is important, and for them that what this means is also diversifying their own investments.
What is the impact of the US Federal Reserve strategy as far as interest rates are concerned going to be on gold?
Overall, in terms of the connection between interest rates and gold, there is an opportunity cost of holding gold if interest rates are higher, meaning, if interest rates increase, that increases the opportunity cost of holding gold, the benefits or the cost of having gold in a portfolio. So there's a negative correlation between interest rates increasing and how the gold price behave. Now, that's one of the variables that influences gold. As we discussed, there are others, including central banks and jewelry and so on. But specifically right now, we are in a slightly better environment for gold, partly because rates are already steady and eventually they will start to come down, right? So even if it doesn't happen straight away, as they start to come down, that should have a positive effect on gold.
JC, what's your view as far as gold ETFs are concerned? They seem to be witnessing outflows, perhaps on account of elevated prices and profit booking as a result.
Well, I think that there are two trends here, what is happening in the West and what is happening in the East. Because it is true that in particular, Western markets have experienced outflows in gold-backed ETFs, partly due to higher interest rates and what we just discussed before. Some of them are coming from Europe. In Europe, you may remember that not too long ago, investors were faced with negative interest rates. So they basically had to pay the bank to have money there. So they were investing heavily in gold. As interest rates started to increase, some of that shifted away. In addition to that, European investors are also facing negative headwinds from higher inflation and costs of living, and that is creating some negative effects as well on gold-backed ETFs and more generally investment. We can also see that on the bar and coin market in the West. To a degree, we are seeing that in the US, and it is true that some of them may be profit-taking, but I think that the main reason has been the directionality of rates and the cost of living. Right now, if we look at Asia, Asia has behaved very differently, as we discussed before. There has been more appetite for positive investment also in gold-backed ETFs.
What about digital gold? How do you see that? Because in India also we have some amount of buying that may be happening as far as digital gold is concerned, but it's a very, very small component of overall gold demand in a country like India.
It's a nascent trend. I think that in all, what investors are looking for are different ways to get exposure to gold. And what is really interesting and what we have experienced around the world is that many of the different ways to invest in gold coexist. So investors can have exposure to bars and coins and gold-backed ETFs, and some of them are also looking into digital gold, right? So there are just different avenues to get an exposure to gold. And what is quite important, I think, to take into consideration is what of those avenues are linked to physical gold, as they will be adding another dimension of performance for investors that behaves exactly how the physical gold would behave.
JC, how long do you think this present cycle is going to last? I ask this from the context of what's happening as far as global uncertainties are concerned, and at some point we will see things settling off. Some of the conflicts that are happening might get settled off. So how long do you see the current frenzy that we are seeing, how long do you think it will last?
Well, again, specifically thinking about geopolitical risk, I don't necessarily think that the geopolitical risk is going away. I mean, to a degree, it has been increasing, partly because a previous trend of globalization has started to give way to more focus on national policies and so on, and that in itself can create a very different dynamic. Now, of course, we all hope that many of the more evident geopolitical risks start to settle. But the good thing about gold is that even though it's a quite effective hedge to hedge against risk generally and geopolitical risk, it serves many other purposes in a portfolio. It can be a source of returns, it can help diversify, and it can provide liquidity. So even if in the absence of geopolitical concerns, gold still has a meaningful role to play in investors' investments.
I don't know if you will want to comment on this, but I just wanted you to respond to a possible question that a viewer might have, that considering the recent performance of gold, Do you think it makes sense to continue to buy, because we've seen gold rise and rise more than even silver, for example?
Well, I think that we need to consider gold from a strategic perspective, and it is important to understand that having exposure to gold can lead to a more robust investment strategy overall, right? Now, in terms of the exact timing of these and maybe the tactical aspects, it may depend on the other assets that an investor holds or how much exposure they already have. What I can tell you specifically is that, as I was saying earlier, there are still areas of support for gold, not only including central bank demand, but the fact that not all investors, especially Western investors, have fully gone into the gold market. So it's not a market that feels completely saturated. There's still potential room for growth in terms of demand. And that can be an interesting perspective as rates start to come down in Western markets. All in all, you can still expect price discovery and some price movements, but the way that we consider gold and think about gold is more from a strategical point of view, meaning the overall allocation that an investor has as part of their investment strategies.
JC, that's an interesting note to end this conversation on, because when we talk about gold, if you were to talk to the average Indian family, gold is something that they acquire and hold on to without even having any regard to prices and price movements. And I think digital gold has been a tough sell, because Indians and our fascination for physical gold will perhaps continue. Thank you very much, JC, for taking the time out to explain in detail as to what is happening as far as gold demand is concerned. China continues its 17th, 18th month of record buying, and that outlook is there for all of us to understand. Once again, thank you very much for your time with us. With that, it's a wrap on this gold special. We'll be back with more. Until then, goodbye.
आज तीसरे चरण का मतदान है। मैं देशवासियों को विशेष रूप से आग्रह करूंगा